Good afternoon, everyone. Very happy to be here. Absolute pleasure. It's the first one for me to launch our flagship publication here in New York. In the regions in print since 1947, and the only publication in Asia and the Pacific on economic and development issues which has a foreword signed by the Secretary General himself. So we're very proud of this tradition. The report typically has every year two parts. One is the economic update of the latest situation, and the second part, it tends to be the theme part, which picks a different topic every year. So this year's theme essentially is about how the countries can make a transition towards environmentally sustainable economies with the focus on energy transition. So let's start with the big picture first on the macroeconomic front. Just a very clear visual shows the last 10 years or so trends in growth and inflation in Asia-Pacific region on average. You'll notice one or two things very obviously just by eyeballing. For instance, the left-hand chart, which is the growth part, you see the economic recovery after pandemic, roughly about 2022 onwards, is still lower than the pre-pandemic levels. So on average, the pre-pandemic average growth was around 5.5%, and it's been hovering lower towards 4.5% and still heading downwards. The red numbers you see, these are our provisional projections and estimates for 2026 and 2027. And again, the downward trajectory seems to be continuing. Same is the case for inflation. Again, it's just sort of coming back to the pre-pandemic level of average of 3.5%. But again, there's an uptick in the wake of recent developments in the Middle East, and we're expecting inflation to jump up again 4.6% on average. As you can tell, higher inflation tends to have, in addition to higher cost of living, implications for interest rates, which in turn feed back into the fiscal position of countries, which impedes their ability to respond to crises and so forth. Nevertheless, Asia-Pacific remains the engine of a global economic growth. So more than half, or about 53.4% of growth is expected to come from Asia-Pacific region. So whatever happens in Asia-Pacific matters for the rest of the world. Some of the interesting or very useful information or developments are lost sometimes if you only pay attention to averages. So once you look at a little more disaggregated picture, we see a lot of people, a lot of economies are not doing as well as you see on average basis. So here we are highlighting only two main risks to the outlook of the economy. One is the recent conflict in the Middle East. Second is the recent uptake in protectionism or trade protectionism, to be precise. And we see a lot of economies and people experiencing shrinking purchasing power because inflation is going up, food prices are going up, oil prices are going up. Broken lifelines, there is a risk to remittances going down. Several Asia-Pacific countries rely heavily on remittances, for instance. Shortages of fertilizers and feedstock also feeding back into and affecting poor people more than the average. There's a possibility of constrained financial access, partly in terms of higher interest rate and partly in terms of higher uncertainty, which is going to hold back financial institutions to lend to the economy going forward. And similarly, there are a whole bunch of channels through which jobs are at risk and wage growth is at risk as well. Labor-intensive exports, as you know, have the backbone of Asia-Pacific growth model, and they're likely to suffer. And similarly, a major proportion of workers in Asia-Pacific tends to be the informal sector, so they don't have access to social protection or other government facilities, so they're likely to be affected. When we look closely in terms of the policy response, least developed countries and small island developing states have very limited fiscal room to be able to respond to the impact of this crisis, to provide relief to the population in general. High debt is one of the problems, but similarly in annual budget, the room seems to be very limited in many, many countries. Our policy message is very simple. Countries need to focus much more on economic resilience, and they need to make a transition for this purpose toward what we call a more domestic demand-oriented economic growth approach, relying both on domestic sources and on sources in the region itself. On the theme part, a couple of slides here. We focus, as I said, on energy transition here. So a very simple context. So we provide a very basic framework how to think through energy transition from a primarily socioeconomic prospect. So a basic lens question is very simple. How can you pursue long-term socioeconomic progress while pursuing energy transition? There's going to be a trade-off. There needs to be a very difficult balancing act that needs to take place. So our basic premise is energy transition will only succeed if it is accompanied by macroeconomic stability, economic growth, and people's well-being. So the first step is identifying good policies. In the report, you'll see we analyzed about 16 policies with case studies of each policy as well. Just one example here to determine, for instance, the scale and pace of reduction in fossil fuel subsidy cuts, right? It has pros and cons. On the green left side, you see the part highlighted in green. There's going to be low carbon emissions, increased labor productivity, and larger fiscal savings. However, the other side is there are risks that it may increase prices and inflation, it may reduce export competitiveness of countries, and it may actually have an impact on higher poverty. So that's one example of the balancing act. While transition seems to be the right way to go about it, policymakers need to be cognizant of the unintended adverse consequences on certain aspects related to stability, growth, and people's well-being. The second component of our framework is countries need to be very realistic. So we identify 4 goals, which are on the left side: reduce fossil fuel reliance, boost share of renewable energy in the energy systems, increase energy efficiency, and ensure energy access. And then we assess the feasibility part. What is the fiscal position of countries? What is the monetary and financial sector position of the countries? What is their governance framework? What is their ability to introduce and adopt technology, for instance, right? And a country varies quite a bit. We present that picture. So here are some examples here. So for instance, the middle column, enabling economic conditions institutions. So in terms of reducing fossil fuel reliance, the feasibility part is moderate, and examples of countries are on the right side. Boost renewable energy. For Korea and Thailand, for instance, it's a largely yes, they can do that. They have the ability to go ahead and doing that. And as far as other goals are concerned, there are limitations. So even if countries want to pursue energy transition, their feasibility aspects coming from an economic standpoint tells us, well, they may have much more challenges compared to their peers. Now, the interesting part is sometimes it's easy to list down policy options which countries can pursue. A natural question is then why they're not pursuing that. Well, there are a lot of political economy constraints that limit the country's ability to pursue more obvious policies sometimes. So we have a whole chapter where it looks into the political economy lens and provides several examples and case studies. Here are some examples of that. So our overall message is countries need to build and sustain the transition momentum. How do they do that? Well, institutionalized dialogues early on with multiple stakeholders is critical to build legitimacy for the change. Otherwise, there's going to be resistance from all quarters. Australia's example of case study is discussed in the report. Time the transition is actually critically important, typically after a beginning of a new political cycle or political regime, or right after a crisis. It tends to be relatively easy to push through certain reforms. Create new beneficiaries in the new sectors, especially in terms of jobs. So people are always going to be nervous if my old jobs are going to be lost because as the whole country is moving towards a different path in terms of the energy sector. Well, as long as the country policymakers can create a very credible narrative that sufficient number of jobs are going to be created as well, it tends to make it easy to go through the reform side. We also provide a lot of examples of what we call behavioral insights or nudges, what examples countries have used to try and overcome some of the political economy considerations. So, for instance, in India's case, framing fossil fuel subsidy cuts as national sovereignty or solidarity measures makes it relatively easy. Setting renewable energy options in the energy profile of customers is benefits from human inertia. So you are already picking that unless you want to change it to a more old version. And peer benchmarking to increase firms' adoption of energy-efficient technology is another example. And again, there are several other examples in the chapter. Last slide, bottom line. So what exactly is the fundamental message of this big, thick report? Is very simple. The global economy, and Asia Pacific is no exception, is going through considerable changes. Examples are escalating geopolitical conflicts, rising trade protectionism, overall growth is slowing down, there is uneven development progress among member states, and countries also want to pursue ambitious climate goals. So what do they do? Essentially, as far as the focus of this report is concerned, countries need two transitions. One, relying more on domestic and regional sources of demand to try and kickstart the economy. And there's a list of policies we have highlighted there. In particular, the policies that help boost the productivity actually tends to go much further, and that requires much more domestic and local focus. And Asia Pacific has been, as I showed, an engine of global economic growth, so they can rely a lot on each other. So regional cooperation being strengthened can facilitate tapping on those resources within the region itself. Second, in terms of trying to pursue climate goals and navigate through these difficult times, which require creation of new jobs, uplifting economies, reducing poverty, and all those things, we go into the detail, as I shared, on energy transition in a manner that goes hand in hand with socioeconomic prospects. We provide a framework how to think it through these kind of policies, paying good attention to both the feasibility of policies that are there and then the political economy constraints that go with it. And that's what we think can actually provide a basis for an inclusive, resilient, and sustainable future for Asia and the Pacific. Here is the QR code linked to the report. Feel free, you can have access. There are a couple of hard copies there at the back if you prefer that, and I'll be here later on as well to discuss in detail, but thank you very much for your attention.
Thank you. Let us go to questions. Edie?
Thank you very much on behalf of the United Nations Correspondents Association for doing this briefing. My name is Edith Lederer from the Associated Press. This report covers up until what date? And I'm asking that because I'm trying to figure out whether any part of the impact from the war in Iran is included, and if it is, what impact was it, and if it isn't, what impact is the war having on your economic forecasts?
Thank you very much. This is a very obvious and important question. The work on the report was finalized during the first week of March, right around the same time. But we did delay it a little bit to have some assessment incorporated in the report. So you'll find a dedicated box, for instance. We revisited entire chapter 1 to revisit some of the forecasts and assumptions to go through that. The last date of the assessment where we closed publication was 17th March. So all the data on which we based our assessment in terms of forecast was essentially up until 17th March. And then we had to make a lot of assumptions regarding, in particular, duration of the conflict, how long it's going to last, how wide it's going to spread, the intensity, and so on and so forth. So the assumption we provide, and we do have a detailed footnote explaining that a little bit, relatively milder effect. Milder in the sense that we assumed that by the end of 2026, things will go back to a bit more normal. Now, this is the baseline scenario assumption. We did assess what if it prolongs, what happens. So the part that is you're not going to probably see in the report, but it's embedded there, is three ways to look at it, three buckets. One is the immediate impact, which is visible in data. Oil prices, stock market declines, currency depreciation, freight costs going up, something that we can already observe, which we were able to observe even in mid-March also. That is reflected. Second is, which we think is likely to happen for sure, when the data becomes available with 1 or 2 more months, for instance, on inflation, on impact on trade, impact on remittances, and a few other macro indicators for which we can say it's all likelihood, even with now with the information we have, will see an impact in the numbers. The third bucket is a little more longer term, over a year, the impact on poverty, displacement of workers, and so on and so forth, right? So we indicate those kind of potential impacts, but sticking only to commenting and incorporating assessment based on which the data was actually available.
Just a quick follow-up. Obviously, Asia has two of the world's major economies, both China and India, both quite dependent on oil imports. Did you specifically look at that issue?
Yeah, not only for India and China, including India and China, we did look specifically at that aspect. So when we were revisiting our forecast, which we made earlier. So for instance, the average growth we project is 4%, and we had to reduce the estimate for 2026 growth for both India and China. China's share in the average Asia Pacific is around 40%. So the moment you change China's forecast a little bit, the whole average tends to be affected quite a bit. Similarly, India is a bigger economy as well. So for both, we reduced. For China, it was 5% in 2025, and for 2026, we're assuming it's going to go down to 4.5% or 4.6%, or maybe in one scenario, 4.3% also. And similarly, India, which was growing over 7%, we expect it's going to grow down by at least less by over 1%, 6.7% or so, primarily because of the impact on dependence on oil. China is relatively less, about 38% on oil, but overall, yes, through multiple channels, either gas or oil or fertilizers, it varies quite a bit, but we did look at those impacts for sure.
Here, then we'll go at the back, then Stefano.
Thank you, Mr. Malik. Thank you for the briefing. My name is Ming Lu with China Daily, and I saw on this report, the report projected the economic growth slowed every year for 4 years in a row. So you had 5.3%, and then 4.8, 4.6, and then now for 2026 you projected 4%. What is the main reason driving this constant economic slowdown, and which countries are pulling up the region up, which ones are dragging it down? Thank you.
These are basically the long-term effects of the pandemic. When we wrote in 21, 22, we were highlighting these impacts quite a bit. We were always cognizant that some of the immediate impact are going to be reflected, but it's going to likely to spill over for several years. So primarily we call this scarring effects through many effects. Productive capacities has been affected, people's productivity has been affected. That now, with a lag of about 3-4 more years of information, we do see in the data. So productivity slowdown is the major reason why Asia Pacific is not going back to its pre-pandemic levels. It was on a declining trend actually before the pandemic. Pandemic simply exacerbated that trend quite a bit. That's number one reason. As a consequence, for example, the income convergence between developing countries in Asia Pacific and advanced countries has now slowed down to the extent because it's on a downward trajectory for sure. So it has a long-term effect for sure. Inflation, same thing. It takes a while, right? So cost of living went up. Then with the Russian-Ukraine conflict adding further impetus to prices going up. So it took 3-4 years before the inflation on average started to come down, which meant interest rates remained higher relative to what they would have been had there been no pandemic or wars, right? Which means the fiscal position should have been relatively more stronger and governments would have been in a position to boost their economies quite a bit. That did not happen. So that's the sort of the story of why there was a lagged impact on overall economic performance spreading over several years. And now we have this new shock. So we are clear, I mean, if it persists, as we were talking earlier, it might have the same impact. It might drag down the region for several years to come.
Sorry, I have a follow-up. So you just says assuming the conflict is not prolonged. So in the report, you also say the 4% projection is assuming the recent conflict in Middle East would, quote unquote, would not last more than a few months. We already is into the conflict a couple of months. Would you think it's already leading to the scenario you describe in the report, and what likely very much impact this year's economic growth?
Yeah. So we had to close the publication of the report by 17th March. Even that was delayed by 2 weeks, right? So that was a suspend or assumption we made. highly uncertain, highly provisional. We note that. But internally, we do actually keep track of alternative scenarios, possibilities, right? So this is the annual publication, comes once in a year. In addition, we do put out what is called a quarterly economic update. So it comes out a short version, 8 or 10 pages, based on latest developments. We put out there. The next issue is going to be, I think, third week of May. So by that time, we'll have more information and we'll see, do we need to revisit our assessment now that more data is available, now that there's more information available on what's happening in the conflict. So we will be keep revisiting those things. But overall, I think it's clear the trajectory is downwards. The chances it's going to go back up is going to be relatively lower. Even if it is over, the damage in many ways has been done, right? So the decline is already 4% in a relatively better scenario. So if it gets worse, it's most likely getting worse than 4% on average.
Thanks, Mr. Malik, for your report. My name is Zina. I'm working for IEM Free and Homeland News. My question here, with the rise of AI, and I'm sure that you will use it in the future to reduce this poverty, and it's increasing poverty even here in the most developed countries, how you are planning to combine between both stuff, AI, and how you will fight poverty with it?
Well, this is not related to the discussion or theme of our research over here. It's an overall global trend affecting all aspects of, I would say, societies, economies, the way people function and work on a daily basis. AI to me is simply a tool at the moment, right? So more and more people and workplaces are incorporating that if they take it as a tool. It can create disruptions in terms of when we provide economic assessment, we keep track of what we call overall mega trends like climate change, demographic changes, and technological advancements. For AI, what remains to be seen is what would be the impact of AI on productivity levels, the point we were talking about earlier. Right now, we don't see that clearly in the data. It's too early, so differently. So if AI innovations or advancements end up having an impact on productivity levels, then it's going to overall beneficial for the economy. That's the part we will assess and comment in our report. Other than that, the impact of AI on people or workplaces, this is beyond the scope of our publication.
Stefano, and then I'll go to Mark.
Thank you very much. Stefano Vaccara, La Voce, New York, Ital Press. I was just reading, I think it's a summary, the foreword written by Secretary General. And apart from the fact that the coincidence that you name, or the organization that you lead, ESCAP.
ESCAP.
I know, but I want to read it, ESCAP, because as the Secretary General says, he says, we witness in real time the effects of a dependence on fossil fuels, where every conflict risks sending shockwaves through the global economy. Homegrown renewable energy provides a secure exit plan for countries to escape this trap. So my question here, it looks like that Secretary General is basically saying, well, on this, for example, the conflict that there is at the moment in the Middle East, well, this could be also an opportunity, because in this part of the world, they are already doing a lot for to renewable energy, to grow on that. Well, my question to you is, at this point, in your, I don't know if in your report, because like you said, you had to close it in the middle of March, but the war in the Middle East could be an opportunity to actually have a better data that you wrote here about having increase in renewable energy, the escape from fossil energy. Yeah. Is it correct?
Yeah, by and large, yes. The sense of urgency has gone up. So the way we put it and the way we have put it here, even prior to the beginning of the conflict, is the need for two key words: resilience and diversification. So in general, if economies are relying on one source of production, for instance, on oil, or one source of market in only one area, right? They're much more vulnerable to potential shocks, could be any one. right? That's a general principle. So this is the point we keep highlighting even before the conflict, and when we were analyzing the energy transition part, we were highlighting that. Those countries that are relying too much on fossil fuels are exposing themselves for potential shocks, could be all sorts of shocks, economic and non-economic shocks. So the need to diversify is important. Second principle, when the shocks do happen, countries that are more resilient in the economic sense tends to do better. So how do you develop resilience? Diversification is part of that, and then you have to invest in a whole bunch of range of policies. I think in 22 edition, we actually explicitly focus on the resilience part in the context of pandemic, why countries need to focus on those kind of things. So now when the conflict has happened, and the Secretary General's, I think, forward was finalized just around that time. The research was done for the last 10 months prior to that, between July and February. So when the Secretary General's forward was finalized, I think it went in the print around 17th March, so early March. So that is just a sense of urgency. In a sense. So, but the way I look at it, the analysis in the report, the theme part, for instance, it is irrespective of the conflict or not, making a very clear case for energy, for diversification, for resilience. The conflict has simply exacerbated or amplified, actually, the importance of the issue. And yes, it can give a lot of opportunities to countries now to give more weight to these considerations, or to try and confront the policies or political economic considerations that were holding them back in a way to pursue in a more ambitious and aggressive manner. So I expect it should be a little more faster now.
Go ahead, Nama.
Thank you, Mr. Malik. This is Namo Abdullah with Rudao Media Network. I have a question on Turkey. As an ESCAP member in South and Southwest Asia, I believe. Turkey, as you know, has been dealing with currency instability for several years. How is that? I wonder if the report says anything about that, and any spillover effects from Turkey to the wider region. Thank you.
It's a regional assessment report, so we are minimal when it comes to going in the detail of country level impacts or situation, unless something is very pronounced or standing out relative to the rest of the region. So I don't recall currency instability, other aspects standing out that much in Turkey in this particular context right now. Turkey's size is the way, for instance, you'll see a whole section. So the entire ESCAP region is divided into 5 sub-regions. Turkey fall in what we call SSWA, South and Southwest Asia region, along with India and Pakistan and other South Asian countries. But for our assessment purposes, that is there. That has been the fastest growing region, sub-region in Asia and Pacific for a while, primarily led by India, but then Turkey is also a prominent economy. So in general terms, we don't see that specific challenges that Turkey is following. We don't go after those as assessment. If something stands out now in the context of conflict, or later on things get more destabilized, we look into that for sure. Some countries, currency markets, some countries, stock markets have reacted more than others in the context, but it's too early to right now say, okay, this country is now really in trouble. It's still third week of April, which means hardly any data points have come out yet. So I think for a proper assessment, based on data, at least July. So some of the high frequency data comes with a month's lag. So we need to have 2 or 3 observations at least in inflation and trade and currency markets to see, okay, this is now much more pronounced than the peers, and hence require much more deeper dive and seeing its impact on the sub-region economy and then overall economy as well.
Very good. We have still a few questions from the room, and also I see one online. Why don't I go to you, Evelyn? You still have a question? And Khan, and then I'll go online, and we will conclude with FTK online. Go ahead.
This is Arun Lewis from Indo-Asian News Service. I want to know, how do you rate India's transition to sustainable energy? And I have a couple of other questions, so maybe take one after the other.
Rate as in what sense?
No, how do you rate India's transition to sustainable economy in terms of energy use?
India has been on a very clear gradualist path, I would say, overall. This is one of our messages, actually, if you see in the highlights also. We use the term calibrated path, because if countries move too quickly, as I was highlighting, they might end up having unintended consequences. India has been much more deliberate and slower even before the recent developments and so forth. But they have been moving. not necessarily. I think their targets for climate emissions are 2070 or so in terms of clean energy and others. Much slower, much delayed. The balancing act, of course, is the reason behind that, of course, is if they try and move too quickly, it might have an adverse effect on economic growth. And they have been one of the fastest growing economies from the region. So I'll rate them as much more prudent, much more gradualist, much more calibrated, much more calculated in terms of moving in that direction. But they are moving in that direction.
You said that the growth rate for India was cut by about 1%. Do you see that as having a relative resilience in terms of being able to sustain an overall high growth rate in spite of the Iran war and the impact on the energy sector?
At the end of the day, the sustained aspect of growth rate depends on the productivity of a country, right? So if underlying productivity is growing, you can actually sustain high levels of growth, other than contribution for what we call factors of input. So India's population is huge, so they have a lot more absorptive capacity to absorb labor into productive areas still. That has been one major reason why India has been growing at a very high rate for a while. After a while, countries enter what they typically call middle income trap. Then things tend to slow down because the contribution on the margin coming from absorption of labor or capital on the margin slows down. And then the real contribution comes from productivity growth, which in turn depends on technology. So far they have been sustaining, I think, really high levels of growth. I don't see the reasons why it cannot do that. One aspect which I didn't mention, for instance, and I think that will be applicable for India, and many other countries. So how do you adopt a new kind of renewable energy sources and technology associated with it? So the rate of adoption of technology in turn will facilitate both the economic growth rate and pace of adoption of renewable energy. And India can be one of the leaders in that.
And finally, my last question, what suggestions would you have for India to weather the energy crisis right now and continue its growth trajectory?
One message which is very general and certainly applicable to India is, and India has relatively more space compared to many other countries, is what we call targeted fiscal support to vulnerable population. Low-hanging fruits. It has many advantages. We spell it out also. So the propensity to spend by lower income strata tends to be higher. They should be deliberately temporary measures and deliberately targeted to populations that are much more vulnerable. It's not that hard to now assess which are vulnerable populations or not. People who are much more dependent on food, for instance, and if the food prices are going up, they will need much more support, and that can be figured out. So they do have fiscal space to be able to undertake those policies. Some countries are relatively in a much more tighter position. They may not be going that direction, but our general message is there is room for fiscal support as long as it is targeted and temporary and very well calibrated. Otherwise, you run the risk of high debt levels, which for some countries is very high. Even if they want to do that, they won't be able to, unfortunately, provide. For them, there's a need for international support, all sorts of support, and whether it's in terms of debt release, for instance, or other cooperation matters. Welcome.
Go ahead.
Thank you, Mr. Malik. This is Yun Japan from Xinhua News Agency. I have a very simple question. I know ESCAP is headquartered in Bangkok. So is this the only event to launch the report, or will you do a similar event in Bangkok to launch the report? Thank you.
Well, our usual practice is to launch it in Bangkok, of course, and but then what we do is what we call a series of engagement events throughout the region, what we call policy dialogues in collaboration with governments, where we took a deep dive. So that happens between May and August in partnership with several member states. Some of them host us. Now we do a lot more online. So roughly about 10 to 12 such events takes place. So these are general messages from the region's perspective, but then some countries are interested in knowing more about their country's perspective. Could be India, could be Pakistan. Just to give you an example, when I go back from here, I'm going to fly to Pakistan, my home country, and they've requested because they have been putting a lot of weight on energy transition. So there'll be policy dialogue or discussion on this report in Pakistan as well. And then later on, we are in touch now with the governments. So as this is launched today, it becomes official. We will reach out to our partners in countries, and hopefully we'll have several such conversations, but much more dedicated in those countries' contexts and going detail into the country's specific aspects rather than broader messages, or in addition to broader messages.
we'll take a final question. I don't know if we can see Iftikhar on the screen at the back, but I do know that he has a question. Go ahead, Iftikhar. Oh, we lost your image. Iftikhar, do you still have a question? And let's see, now I see an image. I can't hear you. If you want to try to unmute. No.
Hello.
Here.
Can you hear me now?
Yes, we can hear you.
Sorry. This is Iftikhar Ali from Associated Press of Pakistan, Malik Sam. You have spoken extensively about the adverse impact of Iran-US conflict on developing economies, but would you please focus a little bit on the most debt-ridden countries?
Debt-ridden countries of the region.
Yeah, of the region.
Okay.
Sorry.
Yeah. Well, this was not the focus of this year's report. As I was explaining, we do an economic update assessment and then a certain theme. This year's theme has been primarily energy transition. We have actually looked at the theme 2 years in a row on debt vulnerable countries in Asia and Pacific, the 2023 edition and 2024 edition. We went in detail of what is the debt assessment of countries, and provided a framework which is an alternative to usual IMF World Bank approach. We call it an augmented debt sustainability assessment. The concept was very simple. When you assess the debt situation, policymakers should internalize the potential benefits of investing in SDGs and thus the consequences on debt positions, and then see what is feasible over here. So in plain words, investment in social, environment, economic aspects do provide long-term benefits, increasing productive capacities, for instance. They should be incorporated upfront, which means those initiatives should be invested, should be supported by support from the government, even if it means increase in debt in the short term. Because once you assess the benefits over time, the net position improves. But for that, you need to have at least a 20-year horizon. So that was our one main recommendation, saying countries need to have long-term debt assessments to go hand in hand with the usual debt assessment approaches that IMF World Bank provides in a much better sense. And that's where you'll see a very detailed discussion on Asia-Pacific countries that are under pressures of debt. Most of them are in the Pacific Island countries, for instance. Another interesting bit we highlight, people normally tend to think high debt is necessarily bad or low debt is okay. That's not true. Just to give you a very simple example, Japan's debt is 260% of the GDP, but they're not considered debt vulnerable. Singapore, 170% of GDP, not debt vulnerable. They can borrow at 1% or less. And then small Pacific Island countries, their debt GDP ratio is less than 30%, and yet they are deemed highly vulnerable. The point is the ability of countries to finance whatever debt positions they create matters quite a bit, among many considerations, including advanced financial markets, which allows them to borrow to support those kind of initiatives. So bottom line is, a detailed debt assessment is not in this particular report. I referred to you a UN initiative led by UNCTAD jointly with all regional commissions called World of Debt. It's still online, and it has actually updated information across the globe. What is the situation of debt? How much is the cost? Who's paying how much on interest payments? How much is going in terms of health education and other areas in the government budget positions?
And thank you, Iftikhar. Let us wrap up with one final question from the room, from Evelyn.
Sorry. Thank you for your report. I'm Evelyn Leopold, Jack Hammarskjöld Fund for Journalists. How did you deal with the DPRK? Because they couldn't have been happier today bragging about their nuclear accomplishments.
Well, this is way beyond the scope of the Regional Commission's assessment. Our assessment is on the economic and social matters. There are many other UN entities that are much more well-equipped to assess more specific questions like these on the country's position on nuclear or other part. We are certainly has no expertise in commenting on that. I don't think so I'll be able to comment anything beyond that, simply because we don't look at to the issue through that lens.
Did you deal with them because they have trouble feeding their people too outside of the capital, do they not?
Not directly. At least the area that I look after, or in general ESCAP, is around development issues, which essentially it runs into policy advice, including DPRK as one of the member states. So, but more specific country level support, lately, no, not with DPRK. Several countries, we do work directly one-on-one with them, but in this case, no, not lately.
Thank you very much. So we had Hamza Malik, who's the Director of Macroeconomic Policy and Financing for Development Division at ESCAP. The full report is online. And we no longer have the QR code, but I'm sure you all have either a copy of the report or you can find it online. Thank you.
Thank you very much.